First, we need to connect a wallet to GMX. GMX is a decentralized exchange, so we're going to click Launch App. Now, both Arbitrum Network and Avalanche Network are supported for this app right now. Which one should you choose? Well, GMX really is an Arbitrum chain DEX, and I think about 90% of the volume is on Arbitrum, but you can use Avalanche if you want as well, if the fees are a little bit cheaper. Arbitrum is a direct layer 2 though on Ethereum, which is why most people use it. Now from here, we just need to connect a wallet. So I'm going to click Connect Wallet. If you don't have a wallet set up yet, I'll leave links below to beginner's guides on how to set crypto wallets up. MetaMask is good, Coinbase wallet is good, OKX wallet is great. You can use any wallet though, it really doesn't matter because Ethereum will be supported and then Arbitrum will be supported as well because it's a direct layer 2. We can get ETH into our Arbitrum network very, very easily. If you have a phone that you want to use, just click Wallet Connect. If you have a wallet on your phone, just scan the QR code and it's going to connect the wallet on your phone. You'll need to use your phone to sign transactions when you want to trade, but you can use it on your phone or on the computer. It doesn't matter. I'm just going to use MetaMask to show you though. If you are using a smartphone, you can just trade directly within your phone. Just go to the dApp browser within your wallet and then just type in gmx.io. That's the website. I'll link them below as well, just so you know you're going to the right place, gmx.io, and it will take you through to this and you can trade directly in your phone's dApp browser as well. I'm just going to connect my MetaMask here, so click this and I'm connected. Now, if you don't have Arbitrum added to your MetaMask, I'll show you how to do that and make sure that everything is set up properly. So what we can do here is up in the top right, what it should say if you've got a MetaMask account is, you don't have Arbitrum added to your MetaMask. Do you want to add it now? So I'll show you how to do that if it doesn't come up. Just switch between these networks. So you can see I'm on Arbitrum now. If I click Avalanche, MetaMask is going to say, do you want to switch the network to Avalanche? And I want to switch, so I press switch. Now, if you don't have a network added, down in the bottom, it's going to say, do you want to add this network to your MetaMask and switch? And you want to say yes, and that's just going to add all of the stuff for you. You don't have to put it in manually. So I'm just going to switch. And now I'm over to Avalanche with the same wallet and the same wallet address. And then I switch back to Arbitrum and it says switch again. Again, if you don't have this, it's going to say, do you want to add the Arbitrum network? Say yes, and that's added to your MetaMask wallet, as you can see here. Because GMX is a decentralized exchange, we are using the blockchain to open positions. Now, what GMX say is that during times of high volatility or when the blockchain is clogged up, you may find that price data and trades, are a little bit slower than you wish. So what they recommend is that you may want to change your RPC. The RPC is the thing that your wallet uses to communicate with the blockchain. So how to change that? What we can do is get our MetaMask up. Now this may be different in different wallets, but I'll show you on MetaMask. We're on the Arbitrum network here, which has been added. GMX would have added it for us if you didn't have it already. And what we can do is go to settings in the top right, click settings here, and then go down to networks. And then from here, search for the network, which is Arbitrum, like this. Click on this and it's going to take you through to this settings page, which is the network's setting page. Now you can see the RPC URL right here. So I'm just using the normal Arbitrum one. So what we can do is go to a page that gives us a list of all the best RPCs. This is chain list. I'll link these below as well. And you can see different RPCs with the latency that they have, general score and privacy. So what we can do here is just choose the one that's acting the best at the given time. So whatever one it is, right? So what we can do is just literally copy that. So this may not be the best one for right now, but you can just copy it and then go back and paste this RPC right here. Just paste it in. So that changes the RPC that you're using. You may want to use one that's lower latency or has better privacy at the current time that you're using it. Anyway, you can use these resources just to check out which one is best and which one you want to use. From here, we need to get some Ethereum into our wallet because the Arbitrum network that we're using is a layer 2 on Ethereum. And so it actually uses ETH for gas. Arb have their own network. Their network token is Arb, but we don't use that to pay for gas and you don't need it to use this exchange. So I'm just going to get my MetaMask here and then I'm just going to copy my wallet address and then I'm going to go over to an exchange to get some ETH. Now you can buy ETH in many different ways. I'm sure you know how. I'm just going to go over to my Bybit account. I've got Ethereum here. Just going to withdraw that. I'm just going to paste in my address And then the chain type that you want to use is Arbitrum 1. Now, Bybit supports Arbitrum 1. Most of the major exchanges are going to support you sending ETH over Arbitrum 1. So make sure you've got an exchange that supports Arbitrum 1. It's this one right here. This is the network that we want it on. And you can withdraw that into your MetaMask account or the other accounts. Just make sure your wallet supports Arbitrum network and Arbitrum ETH. Be really sure of that because we need to use the Arbitrum network for this. So we can withdraw it over Arbitrum 1 network. Binance, Bybit, BitGet, many of the major exchanges support this, so you'll be fine with that. I'll leave links to them below if you want to sign up for accounts with them, deposit and trading bonuses as well down there. From here, we can choose whether we want to trade on V1 or V2 of Arbitrum. V2 is really the upgrade. You get cheaper fees. So what we can do is just switch right here to V2. And that's what we want to trade with. Now, I can show you right here what the benefits are. More diverse markets. So we can actually trade more coins. You can trade Bitcoin. This is wrapped Bitcoin, wrapped Solana, and then some, Ethereum-based assets, which are just going to be direct right here. You get better execution speeds. And the main thing is you get a better fee structure. The fees are a lot better. So you're going to be paying 0.05 to 0.07% in trading fees. That's different to V1 where you traded 0.1%. So you're getting slightly cheaper trading fees on V2. So what's the difference between them? V2 is just going to be better for most traders. So we'll trade on V2. From here, we can choose the type of collateral that we want to use when we trade. Now, what we can do is use either a stablecoin to fund our trades, or we can use the risk asset that we're trading to fund our trades because this is crypto futures. And so all we're doing is placing some collateral on the account to fund any potential losses. And of course, that collateral lets us trade with leverage as well if you want to do that. So the way that we can do this is change it. So you can see the pool. This is the pool of two assets that you're trading. So for right now, I'm just going to show you with ETH and US dollars. You can see on the left-hand side, you can choose the currency pair that you're trading. Everything is valued in USD, but ultimately that is a stable coin, which is mostly USDC as a stable coin. Now, all you need really is ETH here, because when you trade, it's going to swap the assets for that trade. So you don't need to do that beforehand, which is convenient. But the way that we can trade this is, you can see the pool is wrapped ETH against USDC. So the collateral is in either wrapped ETH or USDC. So which one should you choose? That's up to you. I'll get to that in a second, but that's how you choose whether you're actually using your Ethereum or USDC as collateral for your trades. Using either a risk asset or a stable coin as collateral is going to change the risk outlook for your trade. Because of course, let's say we're going long with ETH as collateral right here. Well, we have a risk asset as collateral and we're long that risk asset. So if the price falls, not only is our position going to start losing money, but our collateral is start going to lose its value as well. And so our liquidation price may change and that may move against us a lot quicker than we expect. So if you're going long, with the ETH and you want to go long ETH, maybe use the stablecoin. That's going to give you a firm liquidation price where you know that the USD isn't moving around. Like USDC is just a stable value, and so you know where your liquidation price is, and it's not going to move around with the collateral. So you can do that. The other thing you can do, of course, is go short. So again, what should you use? If you're using a stable coin to go short as well, that's fine. If you have the stable, you just think the price of ETH is going to fall. And so you have a definitive liquidation price and you know what your risk is when you enter the trade. What some people also do is actually use ETH to go short ETH, right? So let's say they have 1 ETH and they want to go short around about 1 ETH. That would create what's known as a delta neutral position because you're long ETH, you have it, and you're short futures ETH the same amount. So if the price goes up or down, you both lose and gain in each of the positions, right? Why would anyone want to do that? Well, what a lot of people do is farm funding rates. So I'll get to this later on in the video, but down here we have all of the details and there is a funding rate that is either paid or received. So when the funding rate is positive, you can actually receive this funding. And so what a lot of people may do is they've got some ETH sitting around and it's not earning any rewards. Maybe they're not staking it. They can use that ETH to actually take a synthetic short position and farm the funding rate. So you can do that on GMX. You can either choose stablecoin collateral or the risk asset collateral to fund your trades. Before opening a position, we can look at all of the fees that are currently in the market. These are going to change over time. A futures market is really trying to balance buyers and sellers all of the time. And of course, they get out of whack a lot. And so what happens is you get these fees that are trying to bring buyers and sellers back into balance. And so what we have here, you can see the entry price. This is the current price of ETH that's going around. So this is the Oracle price that we're getting. So if we want to take a long position, this is the current price of ETH for us. This is our reference rate. And you can see the exit price is a little bit different. So as you can see here, the exit price will change with the price of the asset. It's almost exactly the same. So it's not really worth worrying about. Now, what we can see here is that there's a borrow fee, which is a fee paid because we're opening futures positions, and then a funding fee as well. The funding fee is the mechanism by which the crypto futures exchange tries to manipulate traders to do something. So longs and shorts are always out of balance, but the exchange is always trying to bring them back into perfect alignment. And the way it does that is by trying to incentivize one side of the trade. So for right now, you can see that funding is it's actually positive, but the funding fee is negative for longs and positive for shorts. So what this means is that there are way too many long positions in the market. Way too many people are long, and the exchange is trying to bring them down. So what it's doing is penalizing those longs by getting them to pay a funding fee to short sellers. And that right now is 0.0035% per hour. Now, if you're in a short position, you're getting incentivized to take that position by receiving that funding from the longs. And so if you're short, you're getting 0.0036% per hour just for being short. These funding rates or fees will change over time depending on where the market is, right? If the market is in balance, this funding fee is going to be almost zero. If the funding is way out of whack, the funding fee is going to be extremely high. Now, as of right now, you can see the funding rate is 0.0035%. That's per hour, right? So you can times that by 24 to get a rough figure of what you'd be paying per day in terms of the percent of your trade to have it open. And if you want your trade open for a week or a month, just do the calculation for 30 days, 60 days or whatever. And then that's going to get you a rough amount. You can do an annualized rate, like maybe this would be, around 30%, something like that. Very, very high funding fees at the moment because the market just had a huge, rise. You can see that what happened here, right? So there's a massive, kind of bull move. And so funding is very high, but this is going to change and be dynamic over time. In any case, you need to be aware of it. If the funding is super out of whack like it is now, what a lot of people might be doing is taking their ETH, using ETH as collateral to go short, taking that delta neutral position and farming this funding fee, because the funding fee is very, very attractive for shorts right now. So you don't have to go naked short with a stable coin. You can just use ETH to go short ETH. You have a delta neutral and farming the funding rate. In any case, just be aware of it. If you're going long or short, you may pay or receive this funding. Let's open a position on GMX then. I'll show you a long position as an example. There is a swap feature as well. If you want to swap one asset for another, you can do that within the app pretty easily. And the fees are quite low here as well, but it's just a normal swap between the assets. So if you want to open a futures position, you have to go long or short right here. So we'll click long, and then it says pay and then long. So what this is you have an asset that you need to use as money to open the position. So this is just the asset that you want to use to fund what you're about to do. This isn't the collateral that you're using. This is the asset or the value that you're using to fund this. We can see here that the collateral that I'm using is wrapped ETH. So what's going to happen is it's going to take the value of my ETH, whatever that is, right? And it's just going to use that, and it's going to open a position right here for me in ETH. Okay, so it's actually going to swap into wrapped ETH, use that as collateral to fund the ETH long position. So I'll show you right here. You have the leverage, which is this slider right here. So you can change this around. Now you can see the amount of leverage that you use simply increases the position size of your ETH. So this is the amount that you're paying. That's always the same. The leverage that you're using just means how big is the position that you get. So if you're using 10x leverage like this, I'm paying $44 and my position is times 10. So it's $450, right? $45, $450 more or less. So a 10x leverage position. So I'm funding the 10x with $45. And of course, 10x is $450. So if you go further, you can see the long is just getting more and more valuable. The only thing this does is move up the price at which your collateral gets liquidated if the price moves down. So 10x leverage, what that means is I'm paying $40. So if the price moves down 10% of this position, that $40 is wiped out. So with 10x leverage, a 10% move down will wipe out your collateral and you will get liquidated from your trade. So that's what leverage is. This is what you're using to fund potential losses with that leverage. So I'll just show you with no leverage as an example. So what we can see here is wrapped ETH that we're using as collateral. I am spending this ETH that I've got in my Arbitrum account. I have to pay gas with that anyway. Long ETH. Now what it says here is pay this much and you're longing this position, which is slightly more because I'm using 1.1 leverage. Now it says you've selected ETH as collateral. The liquidation price is higher compared to using a stable coin. Okay, so just keep that in mind. It's going to be a little bit higher. You can see the leverage is 1.09, slippage allowance 0.3%. Totally fine. That's just the difference between the price quote that you're getting and what the trade is actually executed at. So 0.3 is, going to be totally fine here. It'll be done way below that. You can see the collateral spread. The entry price is the one that we're getting when we trade. The acceptable price is the trade that we can accept to trade at, given slippage and other things. Mark price and the liquidation price here. The mark price is the price at which the contract is actually exchanged. So again, it's almost exactly the same, but it's a little bit away. So don't look at the market price. It's the mark price, which is the futures contract, what it's actually exchanged at and what the protocol is basing its liquidations off. So the mark price is what you need to look at. And because the market price can change very, very violently short term, and to prevent everyone getting liquidated, what the system does is take a mark price, which is usually a little bit slower, and it takes an average of prices from around exchanges just to make sure that you're not getting ripped off from one kind of wick on an exchange. So that's the mark price right here, which is very close anyway. You can see our liquidation price right here, which is the amount that if the price falls, that's when we're going to get liquidated. And you can have the collateral as wrapped ETH, and these are our fees. Right now, I think there are some rebates on the fees on GMX, but depending on when you're watching this, it might not happen. What I'm going to do is switch over to USDC as collateral, just to show you. As you can see, we're still using ETH because that's the thing that I have value in, and it's going to use that. If I press long ETH, it's just going to swap. It's going to swap the ETH into USDC. To use that, ETH will be swapped to USDC on order execution. So it's going to do that for me. Don't have to worry about that. And then it's just going to use that USDC as collateral. So let's do this just to show you. So I'm going to long, creating order. It's going to go through to my MetaMask, and I'm going to have to pay a gas fee here. And the gas fee is 64 cents. So that's great. So I'm going to press confirm and then go through. Down below my head, you can see this green box. It says order request sent and order executed, and there it is. So I've now got a long position, decentralized. I think that's awesome. So now we can actually edit that position as well. The first thing we can edit is the collateral of the position once it's live. So right here, you can see I'm ETH long 1.09, got the size, and here's the collateral. So if you want to add to or take away, click this pencil icon, deposit and withdraw. Depositing is adding collateral, which means your liquidation price will move much further away from. If you're withdrawing collateral, then you're increasing your leverage and moving the liquidation price closer to your position. So whatever you want to do, you can do that. Now you have to add the collateral that you use. So I used USDC. So if I want to deposit, I now need some USDC in my wallet and I don't have it. So it's not going to do that swap for you. So if you want to deposit, choose an amount, that you want to deposit, and you're going to have to add this. You can see the leverage gets decreased, right, down because I'm adding collateral. And you can see all the different prices here. So what I need to do is actually get that USDC. So just go to swap and then choose any asset that you want to swap. And you can swap it into USDC and swap ETH. And that's just going to swap it into the collateral that you want to use. Once you have that in your wallet, it's going to recognize that and you can then use it to deposit. If you want to withdraw, you can do exactly the same. And as you can see, I've got that collateral in here that I can withdraw. But remember, if I do want to withdraw, let's say 25% of the position, my leverage goes up. And that means for a long position, the liquidation price moves up closer to your entry. And of course, that increases risk of getting stopped out or liquidated, right? So we can do either of those, so pretty simple. We can also enter take profit and stop loss orders in GMX. These are basically trigger orders. And so you can put this order in to close the position at a certain price. So we've got our position open. What we can do is go to the three dots and then click set TPSL, take profit stop loss. Now you can see your long TPSL and it shows that we have a position, right? So we have this position right here, which is our open position. And you can see this is a close order. This means that we can now set a price at which our order closes. So what we can do is say, I don't care about the take profit for now, don't need to put that in, but I want a specific stop loss level. For example, this support level right here is potentially somewhere that I want to stop myself out at. So let's say we give it a bit of breathing room and it's 2,100. So what I can do is set that price at 2,100 and I can set max. What this does is close my position at this level. So I'm closing my collateral out at this price. And you can see it's a market order. These, I think, are all market orders. You can't choose limit orders here. It's ETH USDC. You can see the collateral that you're using. Keep the leverage exactly the same because you want to close out the position as is, right? That's your close out position trade. You can see the trigger price and the execution right here. And then you can create stop loss order. Press that. You do have to pay fees because it is a stop loss order that's coming in. You will pay the fees when you enter the order, because it's a blockchain transaction, right? So if you press create stop loss, you can see that here. You can confirm, go through. Now, if you want to cancel out of this, you can as well. But you see, we pay the fee, right? So I can confirm that to enter the order. I'm just going to reject that because I don't want that order in. But that is a stop loss order. One thing to be very, very aware of is that that order does not cancel automatically if you close out of this position, because these are two separate instructions to the blockchain. Now, on a centralized exchange, if you close out of this position, it automatically closes out the stop loss trigger order that's associated with the trade. On GMX, that doesn't happen. So what that means is that we're long here, and this take profit, this stop loss, is essentially a short trade because we're shorting to close out this long. Now, if you close this out for a profit, so you close this and you make a profit, and you don't close the stop loss trigger that you have in, which will be down here in your orders. These will be the orders that you have. If you don't close that out, what can happen is you take your profit, you think you've closed out all your trades, and then the price falls down and you actually sell short at this price because that trigger order is still there. So just make sure that if you are closing out a position, go to your orders and any stop loss or take profits are closed as well manually, separately. So that's how you do that. So we'll go to closing this position as well, considering we've just broken even here. You can just close, right? So close an amount. You can choose an amount like 25% or 50% of the position that you want to close out. I'm just going to market order this max, keep the leverage the same, and then close out the position. Then you have to go through the block transaction here. So another 70 cents here, confirm. That will just close out the position as and when it can trade. So there it is, my position's completely netted off. I'll leave the link to GMX down in the description, the other exchange bonuses down there as well for you. Lots of other helpful videos on trading futures as well if you need them. I'll link them all down there. I'm James, it's MoneyG. Cheers for watching, and I'll see you in the next one.